Well, great things have a way of coming back. Although, honestly, given how strong the tide is, it is lifting essentially everyone. Consumer confidence is strong. Business confidence is strong. Financial conditions are accommodative. Leading indicators are surging. It's a dream environment.
And how long does this dream go on until we find out that the Senate's going to have a lot tougher time passing tax reform than the House?
I think that could be one of the things, but that tends to be quite temporary. I'm really talking about things that could really undermine the magnitude of the recovery and generate a more pronounced negative surprise. And those are probably a little bit further out. The most salient, the most important of which is potential rise in unit labor costs.
Are we seeing that? Are we seeing it enough to set the Fed beyond December onto a more aggressive course?
And this is a really key issue. And it's not just the Fed, it's also the margin structure of the companies. If the costs rise too much, you will not be able to achieve the growth. What has happened is that earlier in the year, you've actually seen a significant rise in unit labor costs, but it seems to have tapered off in the second half of the year, giving rise to all this optimism and perhaps stronger than expected earnings growth. It's an ongoing debate, but as you start to go at 4% or below 4% unemployment rate, the probability of rising wages certainly starts to increase.
Interesting. To do that, though, does U6 need to come down further and align with the headline U3 unemployment, or are we already well on that path?
I mean, the U6 is now slightly below its average. It would certainly need to come down a bit more. But the thing that is absolutely critical to watch is labor participation. We know we're on the path of creating 150, 200,000 jobs, which will continue to drive lower unemployment, unless you have a massive number of new job entrants from the current, group of people that are not even looking for work. That labor participation hasn't really gone up yet. So if it stays this low, we're setting ourselves up for rising wages as we move into the next year.